Hi there, thank you for viewing this week's video. Let's take a look at the indices and check out how they have performed and also for the outlook for the upcoming week. First of all, let's do a quick discussion on the market performance last week. The US market began the week with a good rebound, but the snap results spoke the market momentarily. Frankly, personally, I don't understand why the market is using Snap's result, because Snap is typically not a good stock since the IPO. But anyway, I think the market was looking for a reason to sell to continue its downtrend. But of course, the Fed meeting minutes came to the rescue as Powell and Co. signal for pause in rate hike after July. Now, last week I mentioned that Powell can only say that, oh, okay, there's going to be rate hike. And something came out to my surprise as they suggested that they may pause in September to look at how the economy performed after the rate hike, or the inflation, did the inflation come down after the rate hike. That helped the market to rally, and the PCE data released on Friday signaled for slowing inflation, and the declining bond yield helped Nasdaq to become the best performing index. Well, that it was a good week for the US market. Going to the Asian market, both STI and Hang Seng recovered well from its early sell-off. STI alongside with Hang Seng faces selling pressure in the early week, which pushed them back to their respective support level. A good rebound on Thursday and Friday helped to close near their resistance, while Hang Seng was the better performing one as it had tested its tough resistance, while STI was on the way to its resistance. Now, let's look at the performance charts over here. We are looking at the US market over here at this point, where the Dow Jones, S&P 500, and Nasdaq recorded 6.6% to 7.4% rebound, while Hang Seng STI closed almost flat with respect to last week's closing. Okay, so this is where we look at the US market right now. Let's discuss from the technical aspect. The US market has completed its double bottom, which I mentioned last week. Remember last week I talked about the hammer, and of course I sounded a little bit pessimistic because seriously I wasn't aware what the Fed, what they are going to say until Monday. I was listening to, or I was reading on one article. This article was saying that one of the Fed members suggested a pause in rate hike, but the market did not take it immediately as they sell off on the Tuesday, where the snap result spoke the market. But Dow make a remarkable recovery over here, and it continued to climb on these 2 days, Wednesday and Thursday, because of the Fed meeting confirms the speech made by the Fed member. And the breakout over here completes the double bottom. And what we are looking at is that this double bottom has a projected amount of 34,220. So if the Dow can continue straight away to that, that will be the most easiest way to look at the market. But if the Dow choose to take a break because there are still some uncertainty going forward, because there are still a lot of data along the way that's going to be released, then we are looking at the key support level at this 32,673. Okay, Nasdaq and S&P 500, we go for S&P 500 first. We can see the double bottom as well. Most importantly is that this double bottom is formed with a bullish divergence, and this bullish divergence was formed by a purpose break of its support level for S&P 500 here, and of course Dow was here. and then NASDAQ, you can see a slight break over here. So back to S&P first. We are looking at this bullish divergence signal for a weakening of the downtrend. And of course, the double bottom breakout signal for a change in trend. Personal experience is that it will be good to retest the support level, for example, for the S&P 500 4089, and then rebound back to its high over here at 4318. Then that will actually give more strength to a longer rally. So throughout the whole week, I've experienced this, strong whipping of market, where especially for S&P 500, I would say this particular day was quite a wild ride, as I, waited patiently for this white candle to appear. So frankly, I was telling myself, if this candle closed as a long black one, it could be something like that. And I was preparing to cut off my positions because I'm heavily loaded in S&P 500. I use the ETF to trade, which is called the SPY. And luckily, it did not close lower. So this happened. And after that, I was worried about NVIDIA's result, which was after the close of this candle, because the market could use it as a news to sell off like snack. But the good thing is that Fed minutes override everything and help the market to continue to rally, which also helped NVIDIA to go up despite giving a poor outlook. Of course, we have the NASDAQ going up as well, being the best performing index here with 7.4% up. And then let's take a look at the projected level. The projected level is about here, 12,852, if you continue to go up higher. So year to date, of course, we are looking at NASDAQ is still down. Even the rally comes in, still down about the whole month of April, about 15%. If we're talking about whole year, we are looking at about 25%. So is the market priced in for a recession? Now, some say that it hasn't. Some say that it's almost there, because we can, as mentioned last week, that we can see some big players are already in the market, like Warren Buffett is on the shopping spree, etc., etc. So let's see how the US market perform. Move on to Asian market first before we wrap up. STI, unfortunately, it did not break out from its resistance as it struggled at the opening. Despite a good opening to the week, STI was sold off back to its support level here, and then managed to do a good rebound, but is still below its uptrend line here. So meaning to say it has to climb back above this uptrend line in order to be bullish again. All right, and then moving to Hang Seng. Hang Seng is officially on a sideway now, with this support tested twice. And now we are seeing the resistance tested 3 times. So it is a sideway. And to break this trend, it needs to break out from this resistance here. Of course, if it fails to break out from resistance and retest back the support, the sideways continue. Okay, this support level is at 19,929. What we are looking at is that the June is a critical month, because many is expecting Shanghai to gradually return back to its normal daily lives, and factory to reopen again. And of course, the improvement in Beijing's condition will help the market to be bullish. And furthermore, more stimulus package coming from the central government would definitely help. Okay, so wrapping up, let's look at the US market again. The bottom-up signals is already formed and confirmed. And what we are looking at is that whether can they continue to strive higher to the projected level where more good news or data surface can help. So can help it to move up, or those three indices. Next week, the market faces a continuous job claim, ISM manufacturing housing price index, and non-farm payroll. So more signs of slowing inflation will certainly help the market to rally even higher. Please take note that the US market is closed for holiday on Monday night, so we have only Tuesday to Friday to trade. So that is good enough if we see another continuous rally. Of course, personally, I would prefer it to continue to go up rather than it pull back to test support, because sometimes when you come pull back to test support, it may not even rebound. But then still, there's a lot of probability, possible way for things to happen. Okay, so in Asian market, the market will be looking at more positive news from the reopening of Shanghai and of course improving condition in Beijing, as I mentioned earlier, to help the Hang Seng to break up from its resistance. The STI may be looking at more positive news on the reopening front as SIA and SETS ramping up on the employment. And of course, the property sector seems to be doing well in the Singapore market. So that may help to lift the banks higher. So in return, it will lift STI as well. Okay, so thank you for viewing this week's video. I'll see you next week.